The Trump administration has set its sights on one of Canada's most valuable exports. The U.S. Commerce Department has announced a sharp increase in anti-dumping duties on Canadian softwood lumber, raising the rate to 20.56%. For Canada's lumber industry, the impact is immediate and painful. Alberta counts the United States as its largest softwood lumber market, but industry experts warn that British Columbia could be hit hardest. As one BC manufacturer put it, a 35% cost on lumber crossing the border is absurd. For over 250 small, family-run companies like ours, this could wipe out thousands of jobs. The question looms large. What happens when a top trading partner slaps steep new tariffs on a crucial building material? In early 2025, the world got its answer. The United States reignited its decades-old lumber war with Canada, suddenly imposing a hefty 25% tariff on imported Canadian softwood lumber, a move designed to rewrite the rules of North American trade. The stated goal was to protect U.S. producers. The result was an economic shockwave. Markets shuddered. Industries braced for fallout. One of America's biggest timber companies saw its quarterly profits sliced in half, while Ottawa quietly hinted that it held a surprisingly powerful bargaining chip in reserve, one valued at nearly $1 trillion. This dispute quickly evolved into far more than a fight over wood prices. It became a high-stakes clash between politics and production, with ripple effects reaching far beyond sawmills. The tariff decision set events into motion at breakneck speed. Within weeks, the effects were felt from corporate boardrooms to construction sites. Among the first casualties was Weyerhaeuser, the U.S. timber giant often viewed as a bellwether for the entire forestry sector. By mid-year, the company reported its second quarter profits had plunged by nearly 50% compared to the previous year. Weyerhaeuser, which manages millions of acres of timberland, saw net earnings fall from $173 million to just $87 million, despite revenue topping $1.9 billion. Executives warned investors that the turbulence was far from over, projecting another $60 million drop in profits for the third quarter. Three main forces were to blame: weaker demand for wood products as higher interest rates cooled home construction and renovations; oversupply in certain markets, depressing prices; rising costs throughout the supply chain worsened by looming tariffs. Prices for both standard lumber and engineered wood products slid. Even modest signs of stability were faint and unreliable. Still, Weyerhaeuser fought to adapt. It invested in more timber acreage, expanded higher-margin product lines, and approved a $100 million stock buyback, moves aimed at weathering the trade storm with strategic muscle. But the health of companies like Weyerhaeuser was tied directly to the housing market, which by summer 2025 was under siege. On one side, rising borrowing costs from earlier Federal Reserve rate hikes. On the other, spiking building material prices driven by the new tariffs. The effects were swift. In May, U.S. new single-family home sales suffered their steepest drop in almost 3 years. Homebuilders, already dealing with the highest mortgage rates in over a decade, now faced unpredictable lumber prices that made budgeting nearly impossible. Some postponed construction starts entirely. Industry estimates warned that if tariffs remained, they could add up to $14,000 to the cost of building an average new home by 2027, further straining affordability. Supporters of the tariffs, like the U.S. Lumber Coalition, argued the pain was temporary but necessary to protect domestic mills from decades of Canadian undercutting. Critics countered that tariffs would worsen an already dire housing affordability crisis and ripple backward through the supply chain, hurting workers at every stage from logging to manufacturing. Canada, meanwhile, refused to simply absorb the blow. Ottawa began searching for leverage points in its economic relationship with Washington. Trade Minister Dominic LeBlanc pointed out that Canadian pension funds hold roughly $1 trillion in U.S. assets, with another $100 billion flowing in annually, a subtle but potent reminder of Canada's financial influence. Prime Minister Mark Carney, a former central banker, vowed not to be rushed into a bad deal to meet President Trump's August 1 deadline. He insisted that any agreement must protect Canadian jobs, even as domestic pressure from struggling mill towns mounted. For the first time in decades, Canada even considered imposing export quotas on its lumber, long a U.S. demand in trade talks but historically rejected by Ottawa as an infringement on sovereignty. The proposal gained traction during a summer visit from a bipartisan group of U.S. senators pushing for a USMCA-based compromise that would cap Canadian exports in exchange for lifting tariffs. Canadian producers also began shifting away from their heavy reliance on the U.S. market. In just a year, the share of softwood exports headed south fell from 78% to about 68%, with the difference going to buyers in Europe and Asia. Though costly and complex, the pivot reduced Canada's vulnerability to U.S. trade pressure. In Washington, the administration sought to boost domestic supply by increasing logging on federal lands by 25%, even revisiting protected areas under the 2001 roadless rule. But experts noted that federal harvests account for less than 1% of U.S. supply, making the plan more symbolic than transformative. Environmental groups prepared lawsuits to block the move, meaning any real increase could take years. U.S. mills, meanwhile, accelerated modernization with automation and robotics to extract more value from each log. Some Canadian companies bypassed the dispute entirely by buying or building mills in the U.S. South, taking advantage of abundant pine forests and avoiding import duties altogether. The result was a murky situation where Canadian-owned mills in the U.S. were technically part of domestic production, blurring the trade lines and even winning praise from the U.S. lumber coalition. Still, the structural challenges of forestry remained. Trees take years to grow, and sustainable harvesting limits can't be ignored without risking another boom-bust cycle. For now, the dispute is locked in stalemate. Washington is banking on tariffs to force Ottawa's hand. Canada is diversifying its markets and flexing its financial influence. With no softwood lumber agreement since 2015, the clash is a key test of the USMCA era. Some experts envision a deal that suspends tariffs in exchange for set quotas and multi-year stability. Others call for joint investments in forestry technology and sustainable harvesting. But such solutions require political will on both sides and a willingness to compromise in the face of domestic pushback. The stakes go beyond wood. This fight is about how two of the world's closest allies resolve trade conflicts in an era of rising protectionism. Today, a plank of lumber is no longer just a building material. It's a symbol of economic strategy, political resolve, and national priorities. From Canadian logging towns to American construction sites, millions have a stake in how and when this story ends.